In this podcast episode, Vlad Tenev, CEO of Robinhood, reflects on the unprecedented events surrounding the GameStop saga and its aftershocks on retail trading platforms. He acknowledges the bewilderment that many felt witnessing platforms like Robinhood disabling the ability to buy GameStop shares amidst soaring volatility. Tenev explains that these measures were necessary to comply with strict regulatory capital requirements designed to safeguard the market's overall stability. Without such compliance, Robinhood risked having its entire trading operation suspended, which would have indiscriminately impacted all traders, not just those involved in GameStop. While many viewed Robinhood's restrictions as a betrayal or collusion, Tenev clarifies the complexity of the situation. He emphasizes regulatory imperatives shaped after the 2008 crisis, which did not anticipate retail traders triggering massive trading volumes and volatility. The resultant capital demands forced Robinhood's hand, underscoring the challenges brokers face balancing user experience with systemic risk management. Tenev also shares how the media and public narratives around these events have affected him personally, including the difficulty of communicating nuance during a period rife with conspiracy theories and misunderstandings. Addressing the perennial question of why most retail investors tend to lose money, Tenev offers a fresh perspective grounded in Robinhood's extensive user data. Contrary to prevailing pessimistic views, he suggests that retail investors' underperformance is often overstated and rooted in outdated assumptions, primarily commissions on trades that used to eat into returns. With Robinhood's zero-commission model, historically costly barriers have been removed, enabling many retail users to better track or even outperform traditional indices during bull markets dominated by innovative tech and crypto sectors. He admits, however, that retail investors may still underperform during prolonged bear markets when their concentration in high-risk innovation stocks and cryptocurrencies turns against them. Tenev considers that the retail investor segment Robinhood serves tends to exhibit more dynamic trading behavior, skewed towards technology and speculative assets, which can result in volatile but sometimes rewarding performance. Importantly, he cautions that the retail investor landscape is diverse, and while many succeed, others may inadvertently expose themselves to risk without sufficient understanding or preparation. Tenev passionately defends Robinhood's mission to democratize investing, breaking down financial barriers for millions who might otherwise never engage with the stock market. He frames investing as an essential activity that creates generational wealth and financial security, encouraging broad participation rather than exclusivity. Nonetheless, he acknowledges the potential harm from uninformed investments or accidental trading, underscoring the critical role of clear disclosures and education. In this light, Tenev supports enhanced guardrails and transparent product labeling, ensuring users understand what they are trading, be it equities, cryptocurrencies, or leveraged options products. He believes that while everyone should have the opportunity to invest, the platform must clearly communicate risk and product suitability, especially around complex products like options. In parallel, Robinhood has expanded offerings like robo-advisory services and retirement accounts to cater to varying levels of investor sophistication, promoting long-term financial health over speculative activity. One insightful revelation Tenev shares is that the money flowing into Robinhood often comes from discretionary spending, money that might otherwise be spent on entertainment or luxury goods rather than being diverted from competing financial products. This shift reframes the conversation about retail investing as not just creating risk, but encouraging the allocation of discretionary income towards building wealth. It's a fundamental change in consumer behavior, where the company took money that would traditionally flow to consumption and steered it toward investment. Further, he contrasts retail day traders with entrepreneurial types who are highly engaged, treating trading almost like a business, meticulously analyzing companies, sports, or even cryptocurrencies. Tenev parallels self-directed trading with entrepreneurship's high risk and potential reward, celebrating the entrepreneurial spirit despite its challenging odds. This nuance highlights that Robinhood's customers span a spectrum, from casual investors to highly knowledgeable traders who treat the markets as their personal venture. Discussing Robinhood's journey after its IPO, Tenev reveals the multifaceted challenges the company has faced. Although the IPO took place near the peak of a bullish market, the subsequent market downturn hit the company hard, significantly depressing the stock price. Tenev opens up about the emotional and operational difficulties during this period, from managing investor expectations to maintaining internal morale. He emphasizes the importance of leadership in navigating such crises and reaffirming the company's path forward despite adverse market environments. Interestingly, Tenev frames these struggles not merely as setbacks, but as a slow burn of multiple challenges, including the COVID-19 pandemic's impact, shifting work cultures, and evolving macroeconomic conditions. Rather than feeling a loss of purpose post-IPO, he describes an acute awareness of the heavy responsibility in steering the company through volatile waters. Despite the stock's early underperformance, he sees recent signs of renewed investor trust, aligning with underlying strategic progress and market realities. Tenev articulates a compelling vision of Robinhood evolving into a comprehensive financial platform that caters not only to individual investors, but entire families across generations. He highlights the growing trend of high-net-worth clients moving tens to hundreds of millions into Robinhood accounts, signaling maturation and trust beyond the company's early retail base. This trajectory aligns with Robinhood's ambition to become a family office in your pocket, handling not just investments but broad wealth management functions. He argues that incumbent brokerages have failed to solve the family use case effectively, often making multi-account and intergenerational management cumbersome. By contrast, Robinhood aims to turn its interconnected banking, credit, and investing products into a seamless experience, facilitating wealth transfer, accumulation, and collaboration among family members. This multi-generational strategy positions Robinhood to capitalize on historic wealth transfers from baby boomers to younger generations, fundamentally reshaping how American families manage money. Throughout the discussion, Tenev underscores the unprecedented technological convergence defining the current and future investment landscape. He highlights artificial intelligence as a transformational force with the potential to fundamentally change productivity and economic growth, ultimately changing how people engage with finance. Similarly, emerging cryptocurrencies and tokenization are reshaping the concept of money and asset ownership, promising faster, more efficient, and more inclusive markets. Robinhood, in particular, is focused on harnessing tech innovation to maintain competitive advantages through efficient execution, fast product iterations, and improved customer experience. Tenev explicitly connects technology innovation to the democratization mission, as platforms that leverage state-of-the-art technology can deliver better products at lower costs, ultimately benefiting retail users who historically have been underserved. On a personal level, Tenev shares insights about his cautious yet pragmatic approach to managing wealth, shaped by an immigrant upbringing instilling financial conservatism. Even after financial success, he retains a mindset that prioritizes value and deals, shunning unnecessary expenses and preferring used assets over new purchases. His approach melds disciplined financial behavior with a willingness to take calculated investment risks where appropriate. Despite his personal exposure being heavily concentrated in Robinhood stock, Tenev acknowledges the psychological challenge this presents during volatile market swings. To manage potential conflicts of interest and perceptions, he has entrusted decisions about his external portfolio to professional asset managers. This step allows him to focus on running the business while reducing distractions and ethical concerns around insider knowledge. Tokenization emerges as a major theme in the conversation, with Tenev describing it as among the most significant innovations in capital markets in over a decade. He envisions tokenization breaking down barriers for retail investors to access traditionally illiquid markets, including private companies and real estate, enabling real-time 24/7 tradability similar to cryptocurrencies. Robinhood has already launched tokenized U.S. equity offerings in the European Union and demonstrated tokenization for high-profile private companies like SpaceX. However, Tenev also highlights risks inherent in tokenization, such as price dislocations and potential detachment from fundamental valuations, especially in private markets. To mitigate this, Robinhood employs mechanisms ensuring token prices reflect underlying securities' fair value. Overall, Tenev sees tokenization as a disruptive force, unlocking new investment opportunities, benefiting both domestic and international investors eager for more accessible financial products. Tenev weighs in on the growing prominence of AI and its dual role as both a market driver and a labor force disruptor. He acknowledges AI's capacity to quickly automate tasks and transform workflows, urging society to prepare for rapid changes. However, Tenev rejects doom-laden narratives about job losses, emphasizing that jobs will evolve rather than vanish, and that new opportunities requiring uniquely human creativity and oversight will emerge. He urges individuals to become AI native, suggesting that those who leverage AI tools will hold a competitive advantage in the near future. Preparing for this shift involves playing with technology, integrating AI into daily work routines to gain fluency, much like early computer adopters in previous decades. Tenev anticipates that AI will democratize entrepreneurship by lowering barriers to starting businesses and accelerate innovation across sectors. Robinhood's approach to customer service is described by Tenev as a calibrated balance between personalized support for wealthier or more active customers and scalable AI-driven assistance for the broader user base. They recently introduced Robinhood Concierge, a service offering live support via text to customers with substantial assets or frequent trading activity, recognizing that these clients require more immediate and tailored help. Simultaneously, Robinhood invests heavily in AI-powered customer service solutions to provide quick, low-cost assistance for the millions of retail users with less complex needs. Tenev foresees an increasing acceptance of AI support as its quality improves, aiming to redefine customer support efficiency and satisfaction. The strategy reflects Robinhood's broader commitment to technological innovation to serve its diverse user base effectively. Tenev is outspoken about current U.S. regulatory frameworks that he views as outdated barriers to broader financial participation. He points to the accredited investor rules as particularly restrictive, preventing the majority of Americans from investing in promising private companies. This limitation excludes many from participating fully in economic growth driven by startups and high-tech ventures. Looking ahead, Robinhood aims to champion reforms and develop technologies such as tokenization to democratize access to private markets and alternative asset classes. He expresses optimism that as the regulatory environment adapts, retail investors will gain more avenues to build diversified portfolios beyond traditional public equities. However, Tenev also warns of the risks posed by rising wealth inequality and geopolitical tensions, factors that could complicate regulatory progress and market stability.